Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business. Today we're diving into the filings of the 83 Investment Group Income Fund. I know, sounds about as thrilling as watching paint dry, but trust me, we'll find some interesting nuggets in this document, or at least I hope. The filing is a Form N2, which is basically the instruction manual a new investment company gives to the SEC when it wants to start selling shares. It tells you things like the fund's name, how many shares they're selling, and who's in charge. The fund wants to start selling shares to the public as soon as they can. This is actually amendment number 4. They are updating something about their registration. The fund is named the 83 Investment Group Income Fund, and they're located in Calabasas, California. They plan to start selling shares as soon as practicable after the effective date of this registration statement. This form registers to sell securities and they will be offered on a delayed or continuous basis. The document will become effective upon filing. Let's jump to the prospectus. It's like the official sales brochure for the fund. It is for Class I shares of beneficial interest, which requires a $50,000 minimum purchase. The fund aims to generate income by investing in credit-related assets, which are not strongly connected to traditional markets. They intend to offer to repurchase shares periodically, but the timing and amount are entirely at the discretion of the Board of Trustees, so it might be hard to sell your shares quickly. The SEC usually wants these funds to only be sold to accredited investors. This means people with high income or a lot of assets. The fund intends to limit the sale of its shares in this way. It is a complex risk, so it is good that they got lawyers involved. Here is a table showing the expenses. Let's look at the numbers. The management fees are 0.95%. This is what the investment advisor charges for managing the fund. The acquired fund fees and expenses are at 3.74%. This is when the fund invests in other funds and indirectly pays their fees too. That makes the total annual fund operating expenses 5.26%. That means for every $1,000 you invest, $52.60 goes to the fund's expenses each year. Now let's scroll down to see a hypothetical example assuming a 5% annual return. After 1 year, fees will be $57, and after 10 years it would add up to $519 in expenses. It costs a lot. There are no financial highlights available. The fund is new, so we do not have any historical performance. Okay, let's see what risks they want you to be aware of. They might not raise enough capital. If they don't sell enough shares, the fund might not be profitable. The fund isn't diversified. The fund may invest more than 5% of its total assets in the securities of one or more issuers. That could make its performance sensitive to the fortunes of one company. There is risk associated with its policy to repurchase its shares. The fund may have to sell investments to fund repurchases, and that could drive down the price of those investments. The fund could be hacked. A successful cyber attack could jeopardize confidential information and disrupt operations. There are many investment vehicles and separate accounts. The advisor may have conflicts of interest in making allocation decisions between the funds. M83 Investment Group LLC is the investment advisor. They receive a monthly management fee. Ultimus Fund Solutions LLC provides administration, fund accounting, and transfer agency services to the fund. Here is some information on the proxy voting policies. The board has delegated the responsibility for voting proxies to the advisor, subject to the board's continuing oversight. Let's take a look at this appendix, the last part of the document. To invest, you have to be an accredited investor. This basically means you're rich or sophisticated enough to understand the risks. Acting now, let's zoom out and look at this offering more broadly. Exempt assessment of the company's direction. The fund is brand new, so they are starting from scratch. They have got some smart people at the helm, but it's hard to judge their future prospects without a track record. I have notable risks. Fees are very high. The high annual expense of 5.26% will definitely cut into your returns. Keep a close eye on those acquired fund fees because it can eat away at your income, and they invest in non-transparent funds and have to make estimates. The illiquidity is another thing to watch. You might not be able to get your money out when you want OK declare conclusion. Investing in this fund is speculative and it has substantial risk of loss. It is only suitable for those accredited investors who can bear the risks associated with the limited liquidity. In summary, this 83 Investment Group Income Fund is trying to carve out a niche in credit-related investments, but it's really complex. It has a lot of risk. It has very high fees. So this is not the investment to start with if you want a set and forget type of portfolio. Make sure you read the risk before diving into the purchase of this one. Thanks for watching. If you found this helpful, please like the video, leave a comment and subscribe for more deep dives into the world of corporate filings.